All right, good afternoon or good evening, and welcome to this little explanation of the results from Structured Trial 2. So we did a couple of different things in this round. Uh, in the past round, you kind of got used to transferring some money and building a plant and doing some initial production. This time we did some R&D, some securities, and a little bit more production of on the edibles or the Y side. Okay, so let's take a look at the first thing that we did. We spent $5 million on research and development for cannabis. Okay, so where we're going to see that is on the income statement. All right, so I'll just freeze these panes here again so that we can scroll down, and you'll see that that just appears as an expense here in home office. Okay, so that's one of the expenses typical for home office, and that $5 million goes towards the hiring of scientists and other things towards research and development. So the big question on that is, did we get the patent? Okay, in other words, are we able to produce or grow the next grade of cannabis? All right, and the place to look for that is on the inventory tab. All right, so if you scroll down to the bottom of the inventory tab, you'll see this yellow highlighted area, maximum owned grade, 00000. Okay, so what that means is our grade is still 0, which means we were not successful in getting the patent. Now that $5 million mark is sort of right on the cusp of where you need to be. So some of you might actually show that this maximum grade is 1, and if it appears as 1, it'll appear as 1 in all areas. So some of you, it might show up as that, meaning that you were successful. Okay, so some teams may have been successful and some were not. Okay, and the way that works is that the research and development function in the game is a little bit random. Okay, in other words, if one team spends 5 million and the other team also spends 5 million, one team may get it and the other team may not. Just the luck of the draw, deal with it. It's meant to reflect that maybe you got better scientists or something like that. Okay, but that's where you find out if you got the patent. Okay, so you have to be doing your own research and development to have it show up there. Licenses are something entirely different. Okay, so we're still at 0. That's all we can produce, so that's all good. Okay, the next thing that we did is we invested $5 million in home office securities. Okay, so a lot of times at the beginning of the game, you still got a lot of extra cash, or maybe when you're performing well in later periods and you're doing a good job of managing your cash flow, you might find that you have a little bit of extra cash lying around, and your cash balance interest, like we saw last period, is I think about 0.7%, and that kind of sucks. It'd be better to invest your money short term in something that pays a little bit better. So securities, government securities, are a low risk investment, and I think they pay about 4% maybe in home office, maybe a little bit less than that. The data log will tell you that. But what we did is we just took some cash out of home office, so out of this account, and just invested it here in this government securities thing. Okay, so what you'll see is $5 million it's just a swap of assets is invested in that, and you'll see that on the balance sheet. And then you'll also see the interest will be paid in non-operating income here. There it is, interest income. That $212,304 is a mix of the interest on securities and the interest on your positive cash balance. Okay, so it's all mixed up into there. You can do the math and figure it out. But the $5 million has a higher interest rate than just investing it in securities. Okay, now the cool thing about these securities is next period, so beginning of period 3, they are immediately cashed out. Okay, you don't have to do anything. They are, boom, cashed out. So you can just treat those as cash. So if I look at this company, I've got, looks like about $15 million in cash available for period 3. Okay, and if we want to have that invested in securities again, that means we have to make an explicit decision to do that. So you have to, for period 3, enter in securities again. All right. So let's take a look at the next thing that we did. We produced 10,000 grade 0 edibles. Okay, so let's flip over to our inventory sheet. You can actually see them here on the balance sheet of $420,000 worth. But let's take a look at the inventory tab first, because that's a little bit more interesting. And I want to just show you this amount here. So here's our plant 1, and we have edibles here of 10,000 units. And I want to point out these two figures here. I'm just going to blow them up a little bit more. Kaboom. And slide it over a bit so we can see it. Okay, so this is this amount here. This $420,000 represents the total cost of production. Okay, so that includes everything. And you can see that works out to $42 per unit. Okay, the $150,000 that's there represents the cost of the cannabis that went into the edibles. Okay, so you know that in order to make edibles, you actually have to take the raw cannabis plant and do stuff to it and then convert it to edibles. I don't know what you do, add sugar, who knows, not my thing. But anyway, that's sort of the thing. So if you look at the total cost of the edibles right now, in terms of variable costs, it includes those two components. All right, so that's one of the things that you can look at in for this is how much did things cost. So if you want to look at the variable cost, remember that there is that component, and then there's also sort of what I call the finishing costs. Okay, so $15 per unit is the component cost, and then that additional $27 per unit is whatever else goes in to make it an edible. I don't know, you got to cut it into the shape of a gummy bear, who knows. Okay, the other interesting thing here is this is the first time we see something called component sales. Okay, so if you look at the different types of sales, we have consumer sales, which are sales directly to the end consumers in either, Eastern Canada, Western Canada, or Central Canada. We have intra-company sales. So anytime we see intra, that means within company. So if I sell, say, my units, which we're going to do next period, we'll see an intra-company sale where I sell some units from Central Canada over to Eastern Canada, then that would be represented as an intra or within company sale. An inter-company sale means I sell something to another company in the game. Okay, so you'll be doing a fair amount of this as you go along. Now the component sales, this is when you sell cannabis to your edibles plant in the same area. So you can see that we used up 10,000 of those units of cannabis in the production of edibles. Okay, so we record that as a sale of 10,000 units. All right, so you'll see, remember last period we produced 30,000. So you'll see that our ending inventory of cannabis is now down to 20,000 units because we've used up 10. And there's our ending inventory of 10,000 units of edibles. Okay, so we'll flip over to the income statement and look at that same process. You can see that the component sales here, they are expressed in terms of dollars here now. So we sold them at $15 a unit, and so you can see the component sales are 150,000, and that just nets right out with the cost of goods sold at 150,000. Now there is a way to set a price that's higher than this, and that's a component transfer price. I'm not going to go into that. If you want to do that, yeah, just ask me about it or read about it. It's fairly straightforward. Okay, you'll see that we also incurred some warehousing expenses here. Okay, and that's because we had that 20,000 units of cannabis still hanging around that we didn't do anything with. Okay, we could have, if we wanted to, set a price to the consumer market and had those sell, but we didn't, and so we end up paying a warehousing price. Okay, and here we see also our depreciation and fixed account expenses occurring in the area, and our interest income from our positive cash balances. Okay, and you can see we've also lost a fair amount of money in both areas. Again, not a concern because we are still building. All right. The last thing that we did is we transferred $30 million over to Eastern Canada so that we could build an edibles plant. Okay, so if you recall in period one, our subsidiary control was 50 million, which represented the 50 million that we transferred over to Central Canada. Now it's 80 million because we've taken another 30 million and we've zipped it over here into Eastern Canada. So what we should see is that our subsidiary control goes up to 80, and our home office control now is represented by 30 million in Eastern Canada and 50. So the sum of all of these accounts here will always add up to the subsidiary control. And remember, that's the amount that home office has invested in Eastern Canada. And you'll see what we did with that. All we did is we built an edibles plant that's 11 million. You notice that that has not depreciated yet because it just got finished building. Okay, so it's reflected on the balance sheet at its total cost. Depreciation will start in period 3. Okay, so that's pretty straightforward there. That is structured trial period 2. In period 3, we're going to do some other exciting things like sending stuff all over the country by air. And we're going to actually sell some stuff. Okay, thanks for watching, and we'll talk to you soon.